JJ the CPA here. I just was going to give my 2 cents on this. It's basically May 6th. We'll see what comes of it. I don't mind being proven wrong on this one, but there is a sentiment out there that it is unfair that businesses are not going to be able to write off the rent, the utilities, the interest, the payroll, the benefits, the health insurance, the employer match on retirement that they're spending, right? There's a mindset here that Congress didn't intend for businesses not to get the deduction. And I've got other videos on it, and I do have a pretty strong stance on it. But the couple of things I just wanted to bring up, the reason that I don't think ultimately it will stand, that those that got PPP funds will be able to use those dollars and then also get a write-off for what they use those dollars for, is for a couple of reasons. One, grants since the beginning of time. When you're getting money on any grant, state, federal, whatever you spend that grant money on, it's not a deduction. Like, it's just not. Never has been, never will be, just not. And the reason for that is that it's not taxable when you get the grant. So grant money's given, that's not taxable, but the grant money's given and then that has strings attached to it. You spend it on those dollars, okay? And then that is in essence what you got the grant for, to spend it on those dollars. It's not a taxable event when you receive it. It's not a taxable event when you spend it. The second part of that is then, how in the world is that even accounted for, right? So for those that are looking at it like not just, well, hey, I got some money in the door, but if you're looking at it and you're thinking about your financials, like where does that go on your financials, right? And I don't even mean on technicality, but where would that go? Okay, right now I'm booking it as a liability, and then as the money's spent, it offsets the liability. I may do that all at once on a tax return, so to speak, meaning I may still track all the expenses and then do a negative expense on the tax return, and maybe at year end I'll do a negative expense down in the other expense to in essence offset the amount of expenses, so that we can still track year to year payroll and rent and things to that effect. So if you don't put it on as a liability, meaning it's not something that you think will be ultimately a reduction in expenses, then what happens to it, right? I mean, does it just sit on the books now forever? I don't know how is that money going to get taken care of? It just, I understand that you can spend it and it goes, but where are you going to actually like take care of that? When does it fall off your books, right? Not to get too technical, but you're debiting the cash, so to speak, the money that went into your bank account. You're crediting what? You're crediting capital contribution. But here's the third reason that I think it wouldn't stand as a capital contribution. I've talked about it before, but is that if the American government was making a capital investment in the American business, they would have done it not based on payroll, in my opinion. They wouldn't have done it based on expenses. They most likely would have done it based on the sector. They would have done it based on gross revenue or the number of years that it's been in existence. There would have been other things that the government would have based a capital investment on. You don't make a capital investment based on an expense. No one ever does that. No one ever makes a capital investment into any company by saying, hey, what's your payroll? I'm going to make a capital investment based on your payroll expense, right? You make a capital investment based on what? The strength of the company, the assets, right? Assets minus liabilities. You make a capital investment based on what the business is worth, which is mostly based on the positive things, right? Net income, on gross. If they're trying to invest in a sector, then there would have been a requirement based on the sector. And lastly, if our government was making a capital investment in businesses, I think it would have been from the smallest ones up. I think if they were making a capital investment, it wouldn't be into sole proprietors. It wouldn't be for independent contractors. It wouldn't be for the self-employed. No disrespect to them. All I'm saying is you can't invest in a sole proprietorship. You can't make a capital investment into an independent contractor, into a self-employed individual, right? How can you? You can't. Meaning I can't go invest in a sole proprietor. I cannot go invest into an independent contractor. I cannot invest into a self-employed individual. So how is it that the government can? They can't. So really at the end of the day, I think you need to count your lucky stars a little bit, but you need to count on the fact that you're not going to be able to deduct those expenses. So if you're doing tax planning, do not assume you are going to be able to get those deductions. Now, I've been told that the AICPA, American Institute of CPAs, is indicating that they think it ultimately will be a deduction. Hey, if that's how it happens, great. But can you imagine how unfair that will be? And I know we can't you can't go everything based on fair. Well, if we're dealing with the government, I think we need to go based on what's fair. Could you imagine though now if it is those businesses that got PPP and they were able to use those dollars and get a write-off, how unfair it would be to the companies that didn't get the money and then they didn't get the write-off? I mean, think of the companies that decided to go and get the ERC. Think of the companies that are like, you know what, we're just gonna let somebody else have it. Think of the companies that just were left out in the cold. So I don't see it. I don't see it at all. I don't see how it at all is then considered capital. I think we should all feel just lucky and thankful that if you got PPP, you got money, you're reducing down your expenses, you didn't have to take it into income. It's literally free money. And if you're going to use free money, you wouldn't be able to get a deduction for free money that you got or money that you got that wasn't taxable. And anything in the tax code, this is where, especially for our CPAs, EAs, tax pros, think about this, right? There's never anything that if it's non-taxable here, you get to deduct it. Think of it, right? There's not anything that if you deduct it, somehow later it's income, okay? If you deduct it, someone had to claim it as income. You're deducting what's going into an investment like an IRA, meaning you're gonna pay tax on it later. You pay someone, they're gonna pay tax on it, right? There's really nothing out there that there's not a yin and yang, right? A debit and a credit on both sides with both companies, right? I pay a company, okay? I get the expense, but the reason I get the expense is they are picking that up as income, right? And if I don't get to deduct something, then that's typically not going to be income to them. No, when does that ever happen, right? I'm paying someone to mow my lawn at the house. I don't get to deduct it, but the person mowing my lawn has to pick it up as income. So if there's ever any circumstances where that doesn't even itself out, it's never on the deduction side. It's always on the income side, meaning, well, I'm the lawn mowing company, I got paid, and even though the person that paid me didn't get to deduct it, I still have to pick it up as income. Nowhere do I know of that I can think of that I get to spend money, I get to write it off, and someone out there or me doesn't pick it up as income now or later. So when you just think of the historical stance, I don't see how, even with a magic wand, even with that we would ever be able to see it through that PPP money spent would be not taxable and we would be able to deduct whatever PPP funds funded and paid for. Hey, listen, I've got a ton of playlists for you on PPP forgiveness, just on PPP, self-employed PPP, unemployment. Get a lot of common questions. I've got a playlist for that. I've got a reality show where I'm going around the country and I'm helping people, helping small businesses. I've got a morning motivational playlist called Group 300. And basically, you're a small business, you're in. And if you were a business that didn't get PPP, you're really in. So 2-3 minute video every Wednesday. I'm doing a series called JJ the CPA by the numbers, and I'm taking one number that you deal with all the time and putting it on its head. For those that are like, I don't know if I want to know numbers and debits and credits, this series is for you. Every Friday, I've got an in-depth look, really kind of designed for CPAs, EAs, tax pros, or those that are really interested in going deep into an issue. And then soon I will have Learning with JJ the CPA, and it'll be a series where I'm putting together kind of an extensive video to really cover something like how do you become an S Corp? What's an LLC versus a PC? Those kind of things. And anyways, I'm trying to put some stuff out there for you, plus a daily wrap up when it makes sense, if there's some new information out there to wrap up on. But hey, you know how all that starts? And for you to get notification when any of those videos drop is for you to subscribe. So I'd love it if you did it. And if you already have, I love you. Hey, I go live Monday, Wednesday, and Friday, 4 p.m. Central. So I'd love to have you come in, go for about an hour and a half, sometimes longer, answering emails. And if we can, any of those questions that we're getting while we're live. So JJ the CPA here for you. I'm going to say it. I'm going to go with it because Justin McCall is CPA, great friend of mine, and Amanda, you know what they're saying? Like, JJ, you're America's CPA. All right. Hey, listen, I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me.